Hey everyone, Kevin Lewis of Home Life Realty, and welcome to your June 2025 Fraser Valley Real Estate Market Update. Traditionally, June is a whirlwind month for real estate, a period of peak activity where we expect to see over 1,600 homes find new owners. But as we continue through 2025, the word normal seems to be constantly redefined in our market, and June was definitely no exception.
Let's look at the numbers for June. We recorded just 1,082 residential sales across the Fraser Valley last month. That puts a significant 35% below our 10-year average for the month of June, and compared to June of last year, sales were still down 8%. Now, there was a small glimmer of a 2% increase in sales from May to June this year, which is certainly good to see, but that seasonal bump is fairly typical. The crucial takeaway remains that persistent gap from our long-term averages, clearly signaling that the market is still operating well below its usual pace. The story of slower sales, as we've seen, naturally leads to an increase in available homes. In June, we saw 3,113 new properties hit the market. This is 10% more than the 10-year average for June, a notable figure that actually brings us closer to the historical average for new listings than we have been in recent months. Might be indicating a shift, perhaps more sellers are holding off, choosing not to list at what they perceive as lower market values, and are instead waiting for what they hope will be better conditions in the future. That's a calculated decision many homers are making, and it's yet to see whether it's going to pay off for them or not. This consistent pattern of higher new listings combined with slower sales means that our total inventory on the MLS continues to climb. We ended June with 8,102 homes for sale. While there's a negligible 0.8% decrease month over month, which is almost no change at all, it is a significant 31% increase year over year, and a substantial 65% more than the 10-year average for the month of June. This volume of homes is significant. Now let's take a look at the relationship between supply and demand with our sales to active listing ratio. This shows us how many homes actually sell for every 100 listed. Anything below 12% is considered to be a buyer's market. Anything from 12 to 20% is considered to be a balanced market, and anything above 20% is considered a seller's market. Now, other than the last couple of years, we've had about 8 years there in the Fraser Valley where most markets were in a seller's market most of the time. So this is a pretty significant change to see that we're coming back to a balanced market now. In June 2025, only 13% of homes listed found a buyer. Now that's for all property types, and that puts us right at the bottom end of considered a balanced market, nearly into a buyer's market. June's ratio was the same as May, but it's a notable 32% lower than last June's ratio of 19%, which is still a balanced market, but it's on the high end of the balanced market. This clearly illustrates the shift of the market dynamics over the past year. When we delve into property types, detached homes remain in a clear buyer's market with just an 11% sales to active listing ratio in June. Condos are flirting with that buyer's market territory at 13%, indicating some price sensitivity there. Townhomes, however, continue to be the most active segment at 18%. This consistent trend highlights their appeal. They attract both those upgrading from condos and those downsizing from detached homes, making it so that the pool of buyers is much broader than any other part of the market. Now let's take a look at pricing. And this leads us directly to affordability. Overall pricing has seen a slow, albeit steady decline over the past 2.5 years, just minor upticks in isolated months. In June 2025, we witnessed a 1.2% decrease compared to May 2025. And prices are just over 5% lower than they were 1 year ago in June 2024. This consistent price adjustment, coupled with the interest rate decreases we've also seen year over year, is creating a significant shift in the market as far as affordability goes. Now, this is important because if we combine these factors, buying a home in June 2025 is approximately 18% more affordable than it was just a year ago. That's a huge improvement for buyers and probably one of the biggest shifts in affordability helping buyers out that we've seen in a long time. Now, this doesn't mean that homes are 18% lower. That's the combination of the monthly payments that we'd expect to be seeing on an average home. Of course, lower priced homes are going to go down by a lower amount. This may be a shifting factor. Some homes are only 10% more affordable, maybe some are 30% more affordable. But the key aspect remains that homes are more affordable today than they were a year ago, and that's quite rare to see in our real estate market. As we know, in March 2022, we did see prices come down, but that was directly related to interest rates increasing, which kept affordability about the same that whole time that prices went up and then came back down with the higher interest rates. Now, despite these encouraging improvements in affordability over the past year, buyers have largely remained on the sidelines. We're still seeing tariff discussions pick up again after a period of quiet, and there's still a pervasive sense of uncertainty in the air regarding the economy. Concerns about job security, the rising cost of living, and persistent inflation continue to weigh heavily on the minds of many prospective purchasers. People are cautious. Until these broader economic factors stabilize and confidence truly solidifies, we are likely to continue seeing similar market trends. A market waiting for more clear signals from the economy. If you are considering making a purchase, now could truly be a particularly opportune moment. As I've already highlighted, affordability has been steadily improving. Both interest rates and home prices have been trending downwards. The golden question of how far they will go remains to be answered. No one has that crystal ball. But what is clear is that the current market conditions for buying a home are quite favorable, offering undeniable advantage compared to what we've seen in recent years in the Fraser Valley. Now, for those looking to sell, your optimal path truly hinges on your unique circumstances and goals. While it's reasonable to expect prices to eventually rebound, the exact timing remains elusive. Many industry experts, myself included, have anticipated a more robust recovery by now. So if you're holding out for significantly higher home values, there's no certainty on how long that wait might be. We've seen in recent months that many would-be sellers who did wait, hoping for an increase, and still have to sell, actually found themselves selling for less than they could have at the beginning of this year. This market requires a thoughtful, strategic approach. In a market as nuanced as this, having an experienced realtor on your side is more important than ever. If a move is on your mind for the near future, let's connect and discuss the best strategy for your specific situation. Thanks for watching, and I look forward to seeing you again next month.